So one of the really interesting things about crypto, although TradFi is finally catching up, is that it trades 24/7, 365. It doesn't know holidays. It doesn't take vacation. And for a while, I mean, going back years, we would see Bitcoin and other cryptos being punished sometimes because of the fact that bad news seems to happen over the weekend, and there's nowhere else to put on a view. That is changing a little bit, and there's even in the world of crypto, there's a lot of different ways that fast money you were referencing can now be used to express vantage points on the markets. I think we have to start with Hyperliquid and what's happening there, especially with some of their oil perps contracts, which are I think they did like $1.2 billion of notional value in a day, which for them is massive. I mean, the hype token is surging. Kalshi and Polymarket. I know Kalshi is not quote unquote a crypto company. Polymarket is. I mean, we're seeing tons of activity happening there. Some of it, I guess, morally ambiguous, related to like the Ayatollah and his fate, but nonetheless, it just shows the demand for people being able to trade on these events and what's happening. And like this is the quintessential product market fit. So I love like your thoughts on just kind of what's happening. What are you seeing, and like what is the associated impact on of all this activity on traditional markets? Is this a case of like the tail wagging the dog to a certain degree?
That's a big question, and I would be I don't think I don't think the answer is knowable right now. The most confident the thing I guess I could think about with most confidence is that Bitcoin in particular
Mhm.
um, is the most I guess the is the asset with easily the most regulatory clarity and methods of access, right, of all digital assets. Um, it's the asset which makes the most sense to me as a risk absorber over weekends, right? There's not only um, there's a very, very deep options market that's 24/7, right? Very good perps markets. And you could actually get more people who are not in crypto a lot thinking about using Bitcoin as the thing that they would reach to on a weekend. Does that extend down all the way to, the top 20 or top 30 names? Probably not, just out of familiarity. Then you just have crypto people trading with other crypto people, right? And to me, that's less of a shock risk absorber function and more of just people liking to trade and being able to trade on those markets. As for traditional assets, either being represented in derivatives or tokenized over the weekend, I guess the first question one has to ask oneself is like, well, who is able to access these things, right? Think sometimes in our industry, we still tend to overestimate um, the degree to which the market can be on Hyperliquid, or the market can think about using tokenized equities. It's a pretty small subset. It doesn't mean that people aren't smart or that they haven't written smart algorithms, but that kind of macro shock absorber effect for the weekend, um, suggesting that SIFIs, that big banks and insurance companies or giant pension funds or sovereign wealth funds or giant macro hedge funds can now reach into these other blockchain venues and continue to hedge their books over the weekend or take shots. I don't know if we're quite there yet. So you know, I see that there is room for more volatility over the weekend in the absence of other markets being open. I'm just not sure it's all the players, and therefore I'm not sure it represents the market view so much. It just represents the view of the people who can trade there. Bitcoin might be the exception to that, and my view may be outdated, but that's my sense. It can only be the market's view when the entire market can participate.
Okay. So maybe we can just expand a little bit further then. I mean, I think we're getting close to a point in time when the entire market can participate. I mean, tokenized stocks are a thing. We were discussing before. You mentioned Kraken partnering with Nasdaq, and what was it? OKX partnering with
With
ICE.
ICE, yeah, with
ICE,
ICE.
yeah.
Yeah, yeah.
To
With ICE's money anyway. Yeah.
yeah, and I think the CFTC, I mean, they're either setting up rules or they're laying the groundwork to allow for 24/7 trading of derivatives contracts on the platform. So we are getting to that world. I'd love you to sort of talk about like or sort of I guess explore like when you think we might get to the point where like these are uh, basically what's the word I'm looking for? Where these are like mature, liquid, perpetual markets, no pun intended,
Yeah.
where sort of information can get disseminated across financial infrastructure right away, and it doesn't have to just be crypto.
Right. No, it's a good point. Because I do think that Bitcoin has a unique place and role there right now because it's the most familiar. It's probably the thing that you can imagine a non crypto native market participant reaching for in one form or another. And look, CME announced that they're aiming towards futures exchanges will aim towards 24/7 trading, regulated futures exchanges. I think that's just a matter of time, and that may just be how this um, conversation ends early, right? That you end up with the regulated venue. So let's break it into two parts, right? There's perps, and then there's, let's say, tokenized equities or tokenized securities. Um, Perps are amazing. They're a brilliant um, innovation. They've proven themselves successful. I think that as another, as my friend and Bits and Bips host Chris Perkins points out that having not having an independent member driven clearing function, right? Having exchanges clear themselves creates some vulnerabilities in how the perp markets work. But they're a fantastic innovation, but not extremely compatible with the way Americans tend to trade, right? It's definitely compatible with the way retail can trade, but I think spent some time thinking about this. I think they're a little bit more different than dated futures contracts than people realize. It's not just you take the expiration date off and you have a funding event and suddenly you have this experience of trading a perpetual. You don't have to think about, a term structure of interest rates or cash and carry costs and all that. I think there's more to it than that. Part of the reason perps work is that, if a retail person goes and buys a highly levered perp on Binance or Bybit or OKX or somewhere offshore, they post a little bit of collateral. They really have an experience that's more like owning an option than owning a Delta One derivative, right? In other words, they're either going to get liquidated or they're going to have experience a big, positive P&L event. There's no shade thrown at them if they're liquidated, right? If your collateral gets liquidated on a perp exchange, well, you can show up the next day without a big red mark next to your name and do it again. That's different from the way futures markets work here. And so I would like to think that perps will be this heavily adopted instrument that institutions around the world will come to use, especially on nights and weekends, to try to express views. But I'm not entirely sure that it's as compatible in current form as people think it might be. It might be a longer distance away. It may be that you have traditional exchanges running 22 hours a day and just adding Saturday and Sunday. And on things like maybe it'll, start with Bitcoin and Ether and then move to oil and maybe to equity futures too at some point. That'll probably be the road of less resistance.